Spotify reported Q1 earnings last night, and it was all about subscriber growth. Let's listen into this video from Yahoo Finance.
Time now for our chart of the day. Today we're looking at the streaming business, focusing on audio. Spotify and other audio streaming platforms grew subscribers rapidly during the pandemic as people were encouraged to stay at home. Now that drove the demand for content, resulting in more than a 20% increase in paid music subscriptions from 2020 to 2022. However, investors are now concerned that we're near the point where everyone who could be paying to stream music already is. Well, to that point, Spotify reported mixed results this morning, but investors still rewarding the company with shares up about 6% right now. Here to tell us what's boosting sentiment is Yahoo Finance's Alexandra Canal. So, Ali, you also listened to the earnings call. What did you learn?
Hi, Rochelle. Well, the main takeaway for me is that Spotify is delivering on its promises, at least so far, despite that miss on revenue, a wider than expected loss. The company did beat expectations on margins. It also continued to crush subscribers. If we take a look at monthly active users, that was very impressive, coming in at 515 million, beating expectations of 502 million. Premium subscribers also outpaced estimates at 210 million versus the expected 207 million. And looking ahead to the current quarter, Spotify does expect to report MUAs of 530 million, with premium subs expected to reach 217 million. So just insane numbers right there. But going back to those margins, this was a story that goes back to 2022, where investors were increasingly disappointed at Spotify's margins, especially after the company heavily invested in podcast. Yet management had maintained that the company will be much stricter on spending in 2023 and that investors will see sequential margin improvements, which we have seen so far, with margins coming in at 25.2%, beating estimates of 24.9%. Another takeaway here is the ad market. That pressured revenue in the quarter, with CFO Paul Vogel telling investors the quarter was choppy again. He said they're cautiously optimistic moving forward, but, quote, "We feel really good about our relative position in the ad market and how we performed." Finally, when it comes to pricing, analysts expect the company to hike subscription fees in the coming months, especially amid that profitability push, but it did not happen today. Still, X said that he was willing to raise prices when the time is right. Here's a little bit more of what he had to say on that earnings call.
So we have many tools at our disposal as we're thinking about how to increase growth, and the industry realizes that, and our label partners realizes that as well. So that's the constant dialogue that we're in. But yeah, we would like to raise prices in 2023, but it's really a discussion with our partners.
So hinting that those price increases could come at some point this year. But again, as X said, it's all going to depend on negotiations with those label partners. So for all of these reasons, I'm giving a positive vibe check when it comes to Spotify earnings, primarily driven by that margin beat. The fact that management did reiterate that they are going to continue to be very careful about their spending. They're going to be looking at all of their content investments to make sure that they're not overspending. And this is surprising to me, because if you told me this time at the end of last year that I would be giving a positive vibe check to Spotify earnings, I wouldn't have believed you, because they were a company that really struggled with that.
So if we go to their website, for the record, they report that Q1 was the strongest quarter they had since going public in 2018, nearly passing all of its key performance indicators. Again, monthly active users grew by 22%. Premium subscribers grew 15%. Total revenue grew 14%. Gross margins finished at 25.2%, despite the operating loss. Now, if we go to Spotify's chart, this is the daily chart. We had a gap up at the open, some profit taking. Prices pulling back at the moment. Now, if we go to the monthly chart, you can see in February we had a candle on the monthly chart closing above the 13 simple moving average. Just looking at the monthly chart, I can see price getting and moving higher to the 160 level, which would be the next level where we have resistance. If we go to the weekly chart, we could also see the confirmation of the uptrend. If you don't know how to read candles, you can just look at the moving averages. We had a crossover of the 13 and the 26. Now, you never want to chase price. So, if you wanted to get into Spotify, where would you get in? Just going back to the weekly chart. You can see price has been respecting the 13 simple moving average. You can see price took out the most recent pivot high. You can see also a pivot low. So we have support at the 120 level. Right now price is at 140. If you wanted to go long, where do you go long at? Now let's go to the daily chart. I'm anticipating that price is going to close this gap, which would be the potential to go long. Why? Because of the income that was or did not meet expectations. Now, why did price pause here? If we put a line and just kind of scroll over to the left, we could see we have some wicks signifying sellers. We also have the opportunity for price to fill this gap. Filling the gap means a close on the candle. So I'm going to take this off. So I don't know which gap is going to be filled first. However, the momentum's to the upside. Let's go down to the 4-hour chart just to see. Again, on the 4-hour chart, you can see price has been respecting all of these moving averages. Let's just zoom back out to the daily. So here's this trade setup, a potential trade setup. I don't see any significant levels of interest for buyers. However, just reading the chart price, potentially you can see him pull back to the 132. That'll be an opportunity to go long with a 160 target. The better area is going to be at 120. That's only going to happen if there's some type of mass sell-off or bad news on Spotify or broader market sell-off. So this is more aggressive. This will be the more conservative level. However, if price gets down here, potentially you're going to have a trend reversal. So let's see if this level works out at 132 to go long, 1 to 160. Thanks for watching. Subscribe. Please like the video.